Welcome back. Well, the stock on our radar is Meghmani Finechem posted a weak set of numbers on a quarter-on-quarter basis. Revenues declined on a quarter-on-quarter basis. Profit after tax is down 15.5%. Company also announced CPVC capacity expansion, which will take the total capacity to 75,000 tons per annum. Maulik Patel, the chairman and managing director of the company, is joining us now to discuss the earnings fine print and the outlook going forward as well. Maulik, good afternoon. Thank you so much for joining us. In the press release, you've spoken about the top-line growth aided by volumes and realization growth. What kind of realization growth have you seen? Because you have spoken about the volume growth of around 18% on a YY basis. Was it across all the products? What is the blended average realization growth? And do you think the higher prices that we've been seeing in the chlor-alkali segment so far, that has peaked out?
Yeah, so the realization growth is mainly happens in the caustic soda sector because last year in the same time the caustic soda price was not great, and majorly the caustic soda along with the hydrogen peroxide is also right now because of the European market is down, so we have a good demand in terms of the revenue also, and the prices of hydrogen peroxide is also good. Chloromethane is also doing very good right now. And other derivatives which like epichlorohydrin and hydrogen peroxide, which we have started, so all the approval has achieved. We got all the approval from the major customers globally as well as domestically. So that volume is pick up. That is minuscule volume, but yeah, that we are expecting Q4 and next year onwards. I think the volume will pick up from the new product which we have commissioned last financial year.
Okay. So can you, Mr. Patel, just give us a sense in terms of what the demand picture is? If you had to compare it to the same time last year and currently what you clocked in terms of total volumes, and what can you project probably 1 to 2 quarters down the line?
Yeah, so compared to the last quarter, yeah, majority of the chemicals are already bottoms out in last couple of months, and some of the chemicals are started moving upward also. So we are expecting after Chinese New Year after close to 15th February onwards, I think the majority of the chemicals which is bottomed out will start moving upward movement. Okay. So these are the forecasts which we can see, and Q1 and Q2, I think Q1 next financial year onwards, I think we can see the back in the momentum. We can see in a lot of chemicals like PVC also, we can see a lot of movement has started moving upwards in terms of demand globally.
Okay.
So yeah, we can. Yeah.
So you're expecting realizations to go up and not peak out basically, because the general consensus was because chlor-alkali cycle was at least positive for last couple of quarters, there could be some fall in prices as well. But you are saying that you're expecting prices to in fact go up after the Chinese New Year.
Yeah, the global demand in the majority of the chemicals will impact and start moving upwards. Chlor-alkali, if you ask me specifically, then yeah, there is a link to the energy because chlor-alkali depends on the energy and it depends on the energy situation globally, which is right now. And we expect that it will not go, yeah, it is subdued little bit in last couple of months, but it will not go back to an original level of FY21 or Q2 FY22.
Okay, so let's try and understand the demand situation and how y'all are currently functioning, based on capacity utilization of your plants. What exactly is your capacity utilization, say, on a blended basis currently for all of your plants? And what do you anticipate it to go to once China does come back full-fledged in terms of demand post, say, the New Year holiday?
So, last financial, whatever we have commissioned, like CPVC first phase, epichlorohydrin, and the additional capacity of caustic soda, that will be, optimized level. I think caustic soda will be optimized in the Q4 onwards. ECH, we are expecting Q1 onwards, but I think it is delayed by Q1.
I know, Maulik, what we're trying to get down to is basically numbers. If you could just provide us, say, what an average of capacity utilization is across your plants currently, and what do you expect it to probably go to, considering that you are seeing this recovery in demand?
Yeah, so we have an average, you can say average, I think 80% of the utilization is a standard which we are targeting. But we have commissioned the new project, which is epichlorohydrin and CPVC, which has just got the customer approval globally and domestically. So we will start moving in those new capacity will be picked up in Q4 and Q1 next financial year onwards. So if you consider the new capacity, we are running at around 70%, 68 to 70%. You can consider in overall as a company basis.
Okay, so on an average basis, it's 68 to 70%, but in the older products, it's around 80%. The newer capacities are just started to come on stream as well. So considering all this that you have told us, what will the margin picture look like? Because while we are talking about demand picking up but prices going higher, raw material prices are still not at lower levels. So do you see margins at 26% plus is what you had guided for earlier, and revenue growth of around 50% plus? Is it something that you'll be able to maintain?
Yes, we are still expecting, in the current current financial year also, as well as the next financial year, we are able to manage the 28 plus or minus 2 guidance, which we have given in the past. Even though the raw material price has gone down, when the price is going up, you are getting advantage in terms of the inventory. When price goes down, a couple of quarters you get disadvantage in terms of the high inventory cost. But normally in a year basis, you get a 28 plus or minus 2%. I think we are able to manage the show, in coming financial year as well.
Okay, this additional capex which you've announced, can you tell us how you're going to be funding it?
All the new capacity which we are coming up, I think it will start generating the additional cash flow in coming financial year. So debt and internal accrual, both we are targeting for the new capex, which we are doing it for chlorotoluene as well as for the CPVC.
Okay, so what kind of cash flows on an annual basis are you expecting? What are the cash flows, and with the new projects coming up, how much do you expect that to be incrementally coming into your books?
So cash flow basis, I need to look at it in detail, but I think in the current financial year, it is around 500 to 550 crore cash flow we are getting it, from the existing in current financial year. Next year, the volume may increase from the CPVC and the additional capacity of epichlorohydrin. So that will be additional thing probably in next financial year, but it is difficult to comment right now for the cash flow for the next financial year.
Okay, all right, Maulik, we'll probably touch base with you and get more details the next time. Thanks very much for joining in and speaking with us. So that's Meghmani Finechem. Stock is down around over 4% at this point in time. Has been an underperformer in the past 3 months, or down significantly around at least 25% plus. Take a short break, but up next we'll get you more on the markets. Lots of stocks on the radar, so more on the other side. Stay tuned.